We saw the process of issue of shares, which involves application stage, allotment stage, and share call stage. However, in practical situations, there being innumerable applicants and shareholders, the process of issue of shares is not so simple and straightforward. There are various peculiar scenarios which arise in the process of issue of shares. The company must properly account for all these scenarios and keep the books up to date. Let us discuss these peculiar scenarios that arise in the process of issue of shares and discuss the accounting treatment in each case. Here we can see the various scenarios that may arise in the course of issue of shares for which the company has to do proper accounting treatment. Certain shareholders may keep the call in arrears, whereas some may pay their calls in advance. Sometimes there may be an oversubscription for the shares of a company, sometimes there may be an undersubscription. The company may issue shares at a premium, at par, or at discount. And sometimes the company may also issue shares for consideration other than cash. In this video, let us discuss everything about calls in arrears. Once the shares are allotted and allotment stage is done, next the company makes share calls in order to have the shares fully paid up. These could be single calls or multiple calls. When company calls up the remaining amount on the shares to be paid up, generally a due date is set within which such call money should be paid by the shareholders. When the shareholders fail to pay the amount due, either on allotment or on calls, within the time limit provided for the payment of the same, then such unpaid amount is known as calls in arrears. It represents the unpaid amount of the called up capital. When the amount of calls in arrears are deducted out of the total amount of called up capital, we get the total paid up capital of the company. When a company has to account for calls in arrears, the accounts affected or open to record this are calls in arrears account, share first call account, share second and final call account, bank account, and interest on calls in arrears account. The company recovers interest on calls in arrears if the articles of association empowers the company to do so. When the articles of association stipulates interest, then the company may charge interest on calls in arrears at the rate stipulated in the articles. However, if the articles of association is silent about the interest to be charged on calls in arrears, then interest is charged at a rate of a maximum of 5% per annum and not more than that. Coming to the journal entries for recording the non-payment on calls made, that is, to record the calls in arrears, the calls in arrears account is debited with the amount of unpaid calls, thereby creating a balance in the calls in arrears account. The credit is given to the respective call account, which can either be allotment or share first call or share final call or all of these as the case may be, with the amount due on such particular call. So, if calls are in arrears for multiple calls, then each specific call account should be credited and the amount unpaid thereon should be recorded as a credit to such account and debited with the calls in arrears account. The effect of this entry is that calls in arrears account is debited and carries a debit balance against the share capital account, which carries a credit balance. And in essence, it is the amount of called up capital minus the paid up capital. The specific call accounts which were debited when they become due will now get a credit to the extent of the calls in arrears. When the calls in arrears are received along with the interest thereon, then the entry passed to record such transaction is by debiting the bank account with the total amount received. One corresponding credit is given to the calls in arrears account, thereby closing the balance in the calls in arrears account with the amount that was previously unpaid and is now paid upon any call. A second credit is given to the interest on calls in arrears account with the amount of interest that is charged on the calls in arrears. Bank account is debited since company receives the money. calls in arrears is credited so as to set off the debit balance that it carried at the time of being recorded as calls in arrears. The interest account is credited since it is an income for the company.